was nothing that Paul was subjected to as specifically for anything that has happened during that period.
Sorry, can I just be more specific in it? If you go to 3.5.1, it says there you have been deliberately indifferent despite being made aware of the PIC's dissatisfaction with your work performance and being given the opportunity to explain the reasons for such poor performance, including the opportunity to remedy the performance, you have failed or refused to do so. You're saying nothing of that ever happened?
Nothing. I can attest to that, to say that no. I mean, performance management is a serious issue. Once someone starts non-performing, that should be documented to say that no, we really have concerns concerning performance management. So be it that you get put on the performance management process if needs be. That was not something that happened.
So there were no documents with regard to that point?
There was no document wherein I said, I mean, in as much as I know, there was nothing that I can say I said and I be evaluated to say that I'm not performing. So hence I'm saying that no, this issue was baseless and there was no substance to such. That is what I'm trying to say.
And at this, this hearing, were documents provided at all from the HR department or for people who would have overseen a performance management to improve? Were any documents presented to the hearing that you were aware of or that you had seen?
Can I put it on record here? I have never been put on performance management, so there was never a document that says that, Paul, today we are in a meeting of performance management. What has been raised was that your documents on a certain date, like they have indicated, 2nd of February and the 26th of February, your documents were not up to standard. And I argued that point from paragraph 118, page number 30, to say that no, there was a process of upgrading, of dealing with corporate plan. And this was the process, and I have already ticked the box on these issues that I need to be dealing with. And for that reason, to raise such issues to say that no, my documents were not as good, whereas you have never raised an issue prior that. It is unfairness in the sense that you want me to change what you never, which you saw, and what you never told me to change. That was my argument, and my argument remained that. So there was never a point when I was told that no, you are not performing. So it was incidents of issues that I am said to have not done. So you will talk about the corporate plan, you will talk about the quality assurance issues, which speaks to Paul, you didn't submit your documents to an EXCO, which you were supposed to be vetted by the EXCO for submission to the Audit and Risk Committee. Those were the documents that they were talking about. And my question is that I was in the same meeting, which I attended, though I have already been demoted, which I have been called by the CEO in the same date that I am no longer an executive head of risk, which at that period, you will agree with me that no, my situation was in a difficult position. You are sitting down in a meeting that you are not needed. You are expected to do whatever you can do, and you probably have done it, but you have that difficulty. So, but the point is that the issues that are being spoken about are incidental issues, which doesn't speak to performance issues that I was performance managed. That was what I'm trying to drive on.
Let me just be clear. So, I mean, how do people get bonuses if you don't performance manage them?
No.
Were there two sort of processes of bonuses? You do some performance appraisal for bonuses, and there's just the normal one where there's learning and training and all, after that.
Yeah, and thank you so much, Mr. Commissioner. There is a performance, it's not separate, but this was just an issue that people were starting to institute. And it's as difficult as you are explaining it, because I was surprised that all along, I mean, I got a bonus in July. I was paid a performance bonus for my 3.75 score out of 5. So during that period, if there is a process that needs to happen, it will happen as and when we are approaching the end of the year, which was not the case. So this was, hence I'm saying that no, this was more of an incidental issue to say that no, Paul, your corporate plan documents were not good. then if your corporate plan documents are not good, you are not performing. If you didn't follow the quality assurance process, you are not performing. And I'm arguing to say that, no, on what basis? Because these documents, I was in the same meeting that you are saying that no quality assurance was not fulfilled, and there was nothing raised on my documents, but I've presented documents prior period before the 2nd of February. There was nothing that was raised, only at the period when you raise your issues, and on the 2nd of February, then that issue of performance now will arise. And I stand to be corrected if that is procedural, or that is where my problem was. Hence, I'm saying that no.
Ask, so if there's year end and then they've done that, that appraisal, and then after that you don't perform, say, you know, surely they should have some mechanism to say we can do something about that, because they don't have to wait for the next cycle of the performance appraisal.
And that is correct, sir. And for that reason, I mean, I'm not in any way coming to the commission to say that no, such shouldn't happen. I'm just saying that no, with the events that Paul has gone through, which I have stated, you could see that no, there is this issue that is lingering in the whole process. Paul gets demoted for whatever reason that I do not know. But when they realize that no, Paul challenges the demotion process, then the only loophole that they can find, it's incidental issues that has since arose of the 2nd of February of the corporate plan. Secondly, the incidental issue of quality assurance process, which by itself, Paul was there and documents were submitted there to be submitted to the Audit and Risk Committee. So those are the issues that I'm trying to bring to the fore. Yes. So
basically you are saying that this would be like trumped up charges?
Exactly. And it brings the same notion that I have always alluded to, which the executive head of HR really alluded to, say that these people just accept the demotion. These people can bring some flimsy charges to get you rid of you, because they really want to get rid of you. That is really what had happened. Thank you.
I think my colleague, when she asked the question about the contents of 1351, was whether there were any documents that were there to substantiate the charge or the charges, that there was no performance or the performance standard and so on. That was expected of you?
The question, maybe I don't understand it, but the point is this: performance is a function, it's reported by performance scores. And for that reason, over the past 7 years of being at PIC, I was a 3.75 performer. And even just before that period, maybe just to go beyond, on page 34, I need to state that over the past 7 years of working for PIC, of which approximately 3.5, I was executive head of risk, I have averaged 3.75 of 5 as my performance score. I have consistently received performance bonus over this period, the last received in August 2017. Furthermore, I have received long-term bonus on incentive, which is given to those that organization seeks to keep as they are deemed to be an asset to the organization. The last long-term bonus incentive paid to me was on the 31st of 2017. So in February, you are saying that no, Paul doesn't perform, but there was a bonus given to Paul in the 2017. Maybe you can argue that no, that was a long-term incentive, but on August, you gave me a performance bonus. So that is another issue.
Now, I think the question, and I want to come back to it, just a point, if I could follow up on what the judge is saying, but evidence leader, just in terms of the numbering, I think this is wrong, because your paragraph is 137, and then your sub-paragraphs go to 135.
Okay, my
So
apologies.
I think that
Absolutely
just needs to be corrected.
Sorry,
I think the question here, Mr. Magula, is that they quote, and I read the quote, I won't redo it, on the bottom of page 33, the last sentence starting, despite. In a hearing, a disciplinary hearing, or any hearing of that nature, making the allegations would have come to somebody to present evidence to say, this is what was done, this is where our documentation, whether you'd seen it before or not, this is where we can say these are the charges we have and this is the documentation. let's take the performance, the remedy performance you have failed or refused to do. They would have a document that sets out, this is our remedial program for you. We are asking you to do A, B, C, D with these timelines, this supervision, and we will assess at this point in time. What we were asking, were any of those documents presented about you?
No.
So there was I think that's the question, that there was nothing of that nature.
There was nothing of that nature.
I think that's all we were trying to get was that.
Sorry, my apologies, sir.
Thank you.
Thank you. So, I have already read the statement from 138 and 139, 140. I have indicated on 141, just to provide further context, my performance score was 3.51 out of 5 in the year 2015, 2016, and 3.7 out of 5 in year 2016, 2017. In year 2015, 2016, my score was 3.5 out of 5, and nothing was said about my performance. And in 2017, it was 3.7 out of 5. Isn't it strange that after such performances, as indicated above, my performance was becoming an issue? And just to really show that there was no substance in this regard, PIC had an organization-wide salary adjustment process in 2017, which meant salary adjustment to every employee who qualifies within the organization. My salary was adjusted from around 2.7 to around 3.3. The process happened in August 2017, so there was a bonus together with the adjustment that we are talking about. Could it be that if I am a non-performer, I would have been given such a substantial adjustment? That's another question that probably might not, it's not as important, but that is, you give money to those that you still believe that there are people who are doing well within the organization. Argument advances that I am a non-performer and should therefore be demoted or dismissed and are not supported by the evidence provided above. As such, they support that the charges against me were flimsy and just to get rid of me from PIC, as indicated by such event that preceded both my demotion and my dismissal. That was the performance issue. The second charge advanced were in relation to VBS Mutual Bank.
Would you say this amounts to victimization?
It had amounted to victimization. I want the Commission to take context of the issue in the sense that there are events that happen before this happens. There is demotion. Before even demotion, there are issues that the CEO has spoken, which speaks to the whole myriad of issues that he doesn't trust me, he doesn't wish all these things, even to wish to buy me out. All these issues should be looked at in context that already from the CEO side, he was looking for a tool to get me out. And this was the best tool probably in his hand to get me out. I mean, I was investigated for leakage of information, which even today I don't know the report as to what was it in that report, but I mean, he couldn't, so he might have had many tools to really get something that will stick on me, and then he couldn't find it, and that was the best tool to have found to get rid of me. Paragraph 136, the second charge advanced were in relation to VBS Mutual Bank as follows. And I need to explain that this matter was included after I pleaded not guilty on the, was it on the first hearing? I won't know the date, I can't remember the date, but on the first hearing. Then
sorry, Mr. Commissioner, before it's taken now by Ms. Marcus, the numbering has also gone wrong. It's not 136, it's 144. And from there on, it's also wrong, so we will correct that.
Apologies. So, the second charge...
Sorry, do I understand you correctly that you were facing the first charge?
I was facing the charge that were put forward to Paul Magura were the charges that you had on paragraph 137.
137.
Yes.
And
then you go and plead.
After pleading not guilty.
Yes.
These charges were then added.
These charges were added.
On whilst you were there.
They were not added whilst I was there. I was sent the So I pleaded. Then when I came back, then I was given another updated document on these charges. That is the way it happened.
It was an adjournment.
No, it was not an adjournment.
What was it?
So yes, it was an adjournment. So we got out and we went. When I was called up on the second time, that is what had happened. Yeah, so there were these charges that were added in that regard. The second charges advanced were in relation to VBS Mutual Bank as follows. In the third quarter, these were the charges as indicated by the lead investigator. 144.1 will be the first charge. In the third quarter of 2000, you breach your duty of good faith and care towards your employer, the PIC, in that you fail to disclose the financial sustainability of BBS, a PIC investee company. We changed the numbering, it is 144.2. You breach your duty of care and good faith as executive head of risk, and during the third quarter of 2017, when you failed to alert the PIC that there was a material change to the risk he faced having regard to the last VPS right, your conduct in this regard exposed the PIC to risk and potential financial losses, thus eroding the trust and reliance the PIC places on you in your capacity as executive head of risk. Mr. Chairman, Mr. Commissioner, this is my response, and I will read it as prepared. Mr. Commissioner and members, please allow me to state right at the outset that I request the Commission's indulgence in presenting my submission to the Commission insofar as it is deemed appropriate as per the Commission's terms of reference, that I do not do so having regard to other ongoing investigations that are in this regard, in this VBS story, and proceedings in relation to which I do not wish to prejudice my rights. Nevertheless, I would like to categorically and emphatically state that the PIC took issue with me on VBS Mutual Bank after I already had issues with the CEO and the CFO and executive head of HR of the PIC. And it was added to the disciplinary charges preferred against me when I already was on suspension during my disciplinary hearing. It is undeniable fact that I was a board member at VBS Mutual Bank for a period as a shareholder representative of the PIC when the bank began to have problems. I am aware that there are ongoing criminal investigations by the South African Police Special Investigative Units, and they are at an advanced stage to bring the facts to the fore. I want to use this opportunity to clear my name and on issues that were reported in the media. As a former board member of VBS Mutual Bank representing PIC, I take responsibility that what happened at the bank was wrong. But also there is no way I could have known what was happening beyond the misrepresentation made to the board through audit reports that were presented to me as a board member and also as an executive head of risk within the PIC. For example, the board will be provided with board packs that will provide the status report of an organization, both operational and financially. There had always been commentary from management that all is fine and that it's as it is. Periodically, both auditors, that is internal audit, and external auditors will provide that all is well. It is public knowledge that the same reports that were presented to the board were reports presented to the South African Reserve Bank, the bank's regulatory authority, with representation which turned out in the end to be false. I have never participated in any illegal fraudulent activities during my tenure as a VBS board member. Some of the things like fictitious deposit, fraudulent withdrawals, bribes, etc., that are said to have happened at VBS, I got to know them about when I went before the Prudential Authority's forensic investigators. I'm willing and ready to subject myself and cooperate with the law enforcement agencies. I humbly request that I be permitted beyond the foregoing to reserve my rights. That is what I would like the Commission to consider. And I should add that now, I will also add that I have referred a dispute for my unfair dismissal from PIC to the CCMA.
I'd like to understand what you say in your request and reserving your rights. Are you suggesting that we shouldn't question you on this aspect?
I just wanted the Commission to consider the fact that there is something that could prejudice me as the investigations are underway, and that is the point that I'm trying to drive on.
Mr. Commissioner, just for the record, the witness has testified before the Matau Commission. Terry Matau. It was a forensic investigation, I think. My apologies. And I've explained to him that, notwithstanding that, there is nothing prohibiting the Commission to question him on the VBS Bank matter. His request is based on the fact that he has testified before in the forensic investigation. He is prepared fully to cooperate with the South African police investigation, and that it may prejudice him if he is now asked in this commission about the VBS Bank. But he says he reserves his right, but obviously it's up to the Commission to say, yes, we are not going to ask you, or we'd like to have some more information.
Yeah.
He understands that.
Yeah.
Yes, because insofar as it may have an effect on our work with regard to the terms of reference of the Commission, we will ask you questions
Okay.
where necessary. I can just remind you that in terms of our regulations, if you were to give an answer here that incriminates you, it can't be used in the criminal proceedings. So that regulation is there.
Okay.
Okay.
Okay. During this period, from my suspension to my dismissal, there have been verbal contacts by PIC lawyers to my legal advisor asking if I want to settle out of CCMA. But I have insisted that I don't want any payout or negotiations, rather to be reinstated to my job. Recently, my legal advisor received a letter from the employer, Annexure L, asking if I still want to continue with both my matters. That is unfair labor practice and unfair dismissal. I insisted that I really want to go back to work. During this period, the behavior of the executive head of HR was harassment and abuse without understanding that what I have been through prior to him becoming aware of the labor matter that I had. Employees who came to be my witnesses, Bongani Matebula and Shivango Ndadza, were subjected to leakage of information in investigations. At the time of writing, Bongani Matebula was suspended and going through a disciplinary process. I want to make this commission aware that I have a 96-year-old mother who has lost two of her children recently, who personally took me to school, and she totally depends on me for the well-being and health. Since I lost my job, she has been denied the stipends that she normally gets from me every month for her upkeep. I had to take my time off for Gauteng to always be with her, as she's aware of what I'm going through, for comfort, as this is devastating to her. My final word to this commission is that I need to state this to the commission, that victimization, intimidation, ruling by fear by both CEO and CFO and executive head of HR was the order of the day within PIC. I know there are many who have experienced what I went through, but they probably couldn't come out as I did. And I speak for those also. That is what I want to say.
Thank you.
I think I appreciate what you've said, and obviously this is an ongoing matter in a parallel process with what is happening around the VBS, and I think that there will be issues that arise in due course that may warrant us asking you to come back and respond at that time.
That's fine.
I don't think personally from my side that there's anything that I would want to pursue now, but it may well occur in other contexts.
I appreciate it. Thank you.
One question. What is the extent of the loss suffered by the PIC from the VBS saga?
Mr. Commissioner, PIC advanced 300 million and also let's say 350 million, plus approximately 100 to 150 million. So we're talking about 500 million, if I stand to be corrected. So there was, because there were some rights issues that were done continually, which spoke to that recapitalization of the bank. Yes. So a figure of around 400 to 500 will be something that, it's a ballpark figure, not specific.
Mr. Commissioner, if it's any comfort, we have almost completed the VBS investigation, and we will provide evidence to the Commission about the exact amount lost by PIC.
Just as a quick question, what are you doing now? I mean, at the moment?
I'm unemployed. I'm not working.
Mm-hmm.
Thank you.
Okay.
Suppose you don't have a reference letter from the PIC either.
They wouldn't have given me, Mr. Chairman. They wouldn't have given me.
Yes. No further questions from your side?
Thank you, Mr. Commissioner. Perhaps just the last question, following up on questions of one of the members of the Commission. If you reflect today on what happened at the PIC, what is your take? Would you have done it differently? Yeah, definitely. I think,
Mr. Commissioner, I probably need to take you back a bit to when I became the Chief Risk Officer. I was this young man who had ambition you like any young man, you like to arise from the bottom to the top. And you probably in hindsight, you realize that people do have some ulterior motives, and you become usable to what you probably don't know. And for that reason, I probably was a usable boy, truly, if I were to put it that way. And the more you grow through the role, you then realize that there are things that you wouldn't have loved to happen. And when you have that, you become you become a stumbling block to the powers that be. And I probably, as I grew, I started questioning what needs to be questioned. And the more you question that, the more you become an easy victim to get out. You become like a person who has seen the light, and then you are disturbing what you probably have been employed for. And hence, I was a victim of the circumstances that I've gone through. But be that as it may, I think that in hindsight, yes, those are the mistakes that I probably have made as a person, but I wouldn't have done it differently in a way, because you have ambition as a young man to grow through your career. But as for choice, I had the choice to choose between being a compliant person to what is not good and a person of integrity. I've raised what I've raised, and that would have costed me my job to where I currently am at. And I think that I rest without any doubt that I did what I could to stand to the powers that be if they were doing wrong. That is what I can say.
All right. Can I ask you one further question? As Chief of Risk,
yes,
the final report on risk issues when you deal with due diligence, would it be your report or somebody else's report?
I am the one who writes, and I need to put it to this commission that you rather write than to speak. That was the environment at PIC. You rather have your documents speaking to the issue. If people choose to not read them, then they've chosen not to, because the environment was difficult. But yes, it was my report in that regard.
And were there occasions where you would have gone against the, for instance, to say that this is not a good investment or rather transaction, there is too much risk involved and you table it? And has it ever happened that it is changed if you have done that somewhere along the line?
I have raised issues, and a classic example is what Steinhoff was. I raised the issues, we raised the issues, but there was, I have never had an incident wherein we raised an issue and something doesn't get done. And that speaks to another issue that I probably might have not really re-emphasized on it, the issue of veto rights by the members or by the people that are in the committee. Because not to have that right, it becomes, you become some sort of collective responsibility, though you have resentments on certain decisions. And that, by itself, it is my humble recommendation to this commission, if it was to say that no, consideration of veto rights, wherein someone can say, this I don't think it is a good investment, and I reserve my right not to vote for this. And if rather to have this collective responsibility, because some people can be punished for things that they probably had a different opinion about it, about those issues.
I guess what I actually want to find out is whether there was an instance or instances where you would have given a report to the effect that this is not a good transaction or investment, and somebody further up changed it and got the deal through.
The deal went through anyway. The standoff issue is a classic example. Yeah, we raised our concern, but the deal went through. So, hence, I'm laboring probably to the commissioner that our voice was
disregarded.
Yeah.
Final question from me. Risk department, I mean, it's a sort of, it must say no to some things and all that.
Yeah.
And generally, that department, then, given what you say, the PIC, what was happening there, it was in the line of fire, as to say, forged in fire, So what I wanted to know, are there other departments in the PIC that are like risks where they were sort of in the line of fire?
Yes. Yes, Mr. Commissioner, let's just go back to risk and then I will bring the other departments. There is a cycle at risk. I mean, Dr. Zulu was the chief risk officer. When he raised his voice, he left. He was pushed out. I mean, Paul was pushed out. I mean, maybe now when we go to the other departments, I mean, you look at the turnaround times the turnover within the IT department, you see a situation, the same trend that arise. I think that same trends, you can attribute that to the same trends even to company secretary issue. And can I go further to say that it's just a change that has happened. Even HR had the same situation prior, Mr. Polwane. The revolving door was always revolving. The door was always revolving. People were coming out. So there is that trend that no. But for risk, it has been difficult because let's not forget, it is quantity against quality. So long as we push the deals, it is done. So there was, maybe I didn't bring this forth. There was a period that during Dr. Kawa, there was a period when risk was to be expropriated, like to be removed, that risk should never be a function that should be part of any deal making. Risk should be, and you look at, so it might have been an issue that became so big or so huge within risk because, like I said, it became like the department that stops deals. That is really what is the case. So, but there are departments I can tell you that have really suffered the same issue that risk suffered.
Risk seems to be a dangerous career within the PIC.
It is a very dangerous career, and in fact, I mean, let me put it to you. I feel for the guys, should I say, in inverted boys and girls within risk, or they know what the problem could be, or the problem in the transaction, but they cannot raise any. They can write, but they cannot be heard. That really it's a painful thing when you know what needs to be done, but you cannot do that. It is the best thing to really express what you feel and what you think, and someone really judge your opinion and say, but have you seen things that way? Then that is the best thing that you can ever have, but that doesn't exist within PIC.
Okay, so you might need to sort of ring fence risk somehow to make sure it's quite effective within the PIC.
The issue is that, let's go back a bit, Mr. Commissioner. The issue of two powerful people. I probably am, once we have the top down, which doesn't recognize risk, but they are too powerful, I just accept that no, everyone around that environment won't recognize it the way it needs to be. So for me, it's an issue of saying that no, a structure that recognizes a good governance will be the best structure that protects the environment, the risk, the IT, or any other department that exists within PIC. But once you have these two powerful as in TOO, you will have a compromise within both oversight of the organization or risk management or any other function within an organization. Thank you.
Perhaps just one question. Mr. Nzanza, where is he now?
Mr. Ndaza is at PIC.
But in a different position?
Oh,
same position?
No. What happened was that I got to communicate once upon a time. He has since been removed back to market risk. He was a senior market risk analyst. So due to the staff incapacity or either low staff within risk, we took him to become a person we trained to do transactions. But then it became, he was always in... he became, I don't know what happened, then he was returned back so that he's no longer involved in the transactions.
And perhaps for the evidence leader, would it be possible to look at the deals that have gone through, whether good, bad, or where there's been an ignoring of risk, or even deals where there hasn't been, and how that relates to bonuses or incentives? Whether, because the question for me would be, if the deal goes through, what does it do to the bonus pool? So who got what bonuses in relation to which deal from within the PIC? And whether that in fact occurred at all. It may not have, but I would just be interested to know whether the push to get the deal through related in any way to benefit for any individual in the PIC.
It is noted, Mr. Commissioner, and we are already working on that.
Yes, Mr. Magula, thank you very much.
Thank you, sir.
For coming here to testify before us.
Thank you.
I'm sure it wouldn't have been an easy decision,
No.
but you've taken the decision to come, and I hope that encourages others.
Thank you.
Thank you so much. As my colleague has mentioned, you might be called to come back later to clear up certain things.
That's fine.
All right.
Thank you so much, sir.
Thank you.
Mr. Commissioner, can I ask for a brief 5-minute adjournment to rearrange the deck chairs?
You'll tell us when you're ready.
Thank you, Mr. Commissioner, members. My colleague, Mr. Mohapi, will lead this witness.
Thank you, Mr. Commissioner. Mr. Lebogang Molebatsi is ready to take the prescribed oath.
Yes, could you just rise, please? Do you have any objection to taking the prescribed oath?
No, sir.
Do you swear that the evidence you're about to give will be the truth, the whole truth, and nothing but the truth? Raise your right hand and say, "So help me God."
So help me God.
Thank you very much. You may be seated.
Thank you, Mr. Commissioner.
Confirm your full names are Lebogang Molebatsi.
Correct.
Yes.
Mr. Molebatsi, you've prepared a statement for the evidence you're about to give to the Commission. Is that correct?
That is correct.
And this statement you've prepared, was it prepared with any suggestions made to you on how to prepare it by the evidence leader?
No.
Let's proceed from paragraph 2 of your statement.
Thank you, Commissioner. Commissioner.
Why do you, yeah, all right, paragraph 2, all right.
I have been employed by the Public Investment Corporation from May 2016 and have remained in its employ since then with uninterrupted service. That would be 2 years, 10 months. I currently hold the position of General Manager, Listed Equities. I report to the Executive Head, Listed Investments, Mr. Fidelis Madavo, or Fidelis. Currently, Mr. Horatius Maluleka is the Acting Executive Head, Listed Investments. My education and work experience.
Before you get into that, Mr. Molebatsi, the Commission's already had evidence and your name came up in Mr. Victor Sini's evidence. You are the fourth mentioned person, and he reported in a way to you. Is that correct?
That is correct. Victor Siani reported to Sunil Vagiz, who in turn reported to me. Thank you. My qualifications include a BCom honors, and I'm qualified as a Chartered Accountant, South Africa. I have over 16 years experience in financial services, of which 13 years have been in asset management. I joined Stanlib Asset Management as an equity analyst in 2006, covering banks and financial services. I've held several roles at Stanlib, including Head of Financials Research, as well as several portfolio management roles. Portfolios I managed have won several awards for best performing funds, including Raging Bull and Morningstar Awards. In 2016, I decided to leave the private sector and join the PIC due to the opportunity to implement an investment process for listed equities and to generate good overall returns for clients. The opportunity to lead an investment team that could compete with other asset managers in the market. The opportunity to make a difference and be part of long-term economic solutions that South Africa needs. How I manage the listed equities department. In-house managed equities are split between two, which is the indirect index tracker portfolio and the enhanced indexed portfolio. The tracking portfolio is managed with an objective of delivering returns that are in line with the market, in other words, generating beta. And as such, its stock weights are kept in line with the market, and hence the tracking error is close to zero. The enhanced indexing portion of the portfolio, on the other hand, is managed with the objective of outperforming the market, in other words, delivering alpha. And as such, the investment team takes positions on either side of the JSE SWIX, which is the benchmark.
Can you just explain those in layman's terms, the two types of portfolio?
So the fund, which is managed internally, which has listed equities portfolio, is split up into two buckets. There's a larger bucket and a smaller bucket. The larger bucket effectively replicates the way the market performs on a one-for-one basis. In other words, it holds shares and stocks in companies in line with the weights that those companies would have in the index. There's a second part of the portfolio, which is the enhanced indexing portfolio, which would also hold shares in the listed equity market. However, this portfolio would effectively have slight differences between the weight it holds in the fund as well as the weight that that stock or that company would be in the overall index. And the reason why we would do that is because we would want to be overweight companies that we think will do better than the market and be underweight stocks that we think will do less or would perform worse than the market. Can I continue? In paragraph 8, I say, my main daily task, and this is really 90% of what I do, my main daily task is to oversee the team that manages the enhanced index portion of the internal portfolio and ensure that we generate above benchmark returns for our clients. To this end, the first task I embarked on after joining the PIC was to implement Project Good to Great. This project's objectives was to A, outline the equity investment philosophy for the enhanced indexing fund. B, introduce a research process, namely the 4-factor framework. C, cover the top 60 companies using the 4-factor framework to facilitate investment decisions. In other words, which companies the framework showed to have value versus those that it did not. Implement, that's D, implement a research portal and portfolio analytics tools. Project Good to Great was successfully implemented and resulted in improved fund performance. The enhanced indexing portfolio's returns are well in excess of the benchmark that it is measured against. That's on a 1, 2, 3, and 5-year periods. That's as at the end 31st January 2019.
Sorry, and that project is still being implemented at the PIC?
Correct. So that is a project that is now embedded and is fully part of the investment process.
Question, Mr. Mulebatsi. Yeah, Mulebatsi. Just give us a sense of the outperformance of the index, on the enhanced index fund.
So on the fund that we manage for our largest client, which would be the GEPF, the fund is about 70 basis points above. So in other words, the return that the fund has generated is 70 basis points higher than what the index would have generated. That's on a 3-year basis as well on a 5-year basis. On a 1-year basis, I think it's slightly less than that.
And it's after costs, isn't it? After costs or pre-costs?
That would be pre-costs, but I will have to double check the chair. Commissioners, apologies.
We undertake to just check those numbers with Mr. Mulebatsi and get back to the Commission, Mr. Commissioner.
Yes, because costs are quite critical in this process, is it, you know, with 70 basis points, isn't it, Mr. Mulebatsi?
That would be true. However, you know, as a percentage, in other words, as a basis point, it wouldn't be material. In nominal terms, it may be large. However, as a percentage of the fund, it wouldn't be extremely large. In other words, it wouldn't reduce the return to a negative territory.
Do you explain the 4-factor framework later in your statement? If not, can you tell me what it is?
I will do so, Commissioner. The 4-factor framework is a research process that I introduced when I arrived at the PIC. Essentially, what it does is it develops almost an unemotive framework with which we could utilize to assess the quality of companies and to assess the attractiveness of companies. The 4-factor framework consists of 4 main factors. The first one would be what we termed quality, and quality effectively represented a company or a firm's competitive advantage within the industry for which it finds itself. And within that first factor, quite a lot of work is then done wherein we analyze the company's ability to outperform or to perform and keep up to pace with the developments in the industry with which it finds itself. And therefore, we would make an assessment to say, is this industry a growing industry? Is it a declining industry, as an example? Is this company a company that would compete effectively? And what tools does it use to compete effectively? Does it use pricing power? Does it use innovation? What would that company use to compete in that space? The second part of the factor analysis would be uncertainty rating, or in other words, what we would deem a risk framework. The uncertainty rating is effectively where we would do a historic analysis of the company's ability to weather the storm, if I may put it that way. In other words, how volatile are the profits and the earnings have been through time and through different economic cycles. So that would be, and we would then use that to make an assessment to say, what is the discount rate that we would want to apply to this particular company as a result of the volatility that is displayed through time. The third one would effectively be the ESG, or the governance side of things. And more our focus on that ESG score would more focus on management's ability to allocate capital effectively. In other words, have management be able to choose between the right ways to invest the allocated capital of the company in such a way that it generates sustainable returns. The fourth factor, which I must just recall now because I haven't written it down. Apologies for this. I will come back to the fourth factor.
Yeah, you can come back to that.
I didn't write it down, and it's just skipping my mind now.
You may proceed, paragraph 11.
Paragraph 11. In order to provide context as to the two transactions that I've been asked to discuss in my statement, and partly in response to the statement made by Mr. Victor Siani, in this I refer into his particular to paragraph 14 of his statement, I believe it is important to explain the approval process of research reports before they are submitted to committees, in other words, to PMC or to IC. There are three types of equity reports, two of which are for submission to PMC or IC. Deep dive reports, which take in an in-depth analysis of a listed company. The purpose of these reports is to help portfolio managers and the general manager make investment decisions on companies already listed on the JSE. Deep dive reports are reviewed by the line manager, and once approved after debates, and once again, this is after debates, not dictated, it is presented to the listed equities team. It's important, if I may just add here, that the listed equities team is not the PMC, nor is it the IC. So this is a separate meeting when I say presented to the equities team. The final document is uploaded into the Code Red research database. The call of the primary analyst is what is recorded and tracked, even if the line manager may have had a different view or recommendation. In fact, the entire listed equities team puts their view of what they believe the investment call should be, in other words, buy or sell, by voting post the presentation. This is a culture that I introduced to the team. I do not believe in dictating views to investment professionals, but I do expect them to be able to defend their views and convince people of their perspective. And Commissioner, if I may, I've just recalled the fourth factor, which is valuation. Valuation, which is the fourth factor that we analyze.
Can you just, with the valuation as well, explain it with the same level of detail as you did the other three factors?
Will do. The valuation element is where we then analyze what we think is the intrinsic value or the value that we think the company is worth on a long-term basis. And we deployed several tools to do this. The primary tool that we do use, though, in a normal company or a company that would have been listed for a prolonged period of time is a discounted cash flow valuation approach. That is our primary valuation approach that we would use. However, we would triangulate that valuation. In other words, we would do other valuation approaches in order to either add to our understanding of that valuation or to give us a different perspective of that valuation. So we would do, for example, price to earnings multiple approaches. We would do like normalized price to earnings valuation approaches. We would do things like price to EBITDA valuation approaches. And depending on the nature of the company, we would zoom in on a specific kind of a valuation approach.
Okay, we can proceed. Paragraph 12.2.
Paragraph 12.2. The other report that we do...
I'm tempted to ask you, because I've come across this term EBITDA. What is that?
EBITDA, Commissioner, is earnings before interest, tax, depreciation, and amortization. It is a very important number in the sense that it gives one a pure sense of the cash generation that a company makes. In accounting, there are things like depreciation and amortization, which are not necessarily cash flows. In other words, they're not necessarily, will not result in an immediate outflow. However, as assets depreciate, they are charged against the income statement and is a cost against the income statement. However, that charge is not necessarily a cash number. There's also obviously interest, which is reflective of the extent to which a company's balance sheet is geared. So the higher the debt a company has, the higher the interest it would have. And therefore, there would be also an expense that comes out of the earnings of a company. And so EBITDA adds back the interest, and it adds back tax as well, and it adds back depreciation and amortization. So the number that you have there is effectively showing you of the revenue that a company generates, less the costs that that company incurs to generate that revenue. This is the cash that the company is able to generate. So it's quite an important indicator of the cash generation ability of a firm and cash flows or potential cash flows.
Can we say that number then gives you the opportunity to compare companies, on an equal basis?
That is true, Commissioner. However, I would caution that it is specific to industry. So, for example, banks do not generate an EBITDA, as an example, simply because of the fact that of the construct of the balance sheet. So, I would agree with you that EBITDA in the industrial space, even in the mining space or resources space, EBITDA number is a very useful tool to allow you to compare companies across those industries. However, in financial services, a lot of the companies, such as banks, do not generate a number such as an EBITDA that would make sense. So in that instance, we would look at more on return on equity. Continue on scoping reports for submission to PMC1. The purpose of this report is to outline a potential investment opportunity that is outside the normal portfolio rebalancing process, which is covered by deep dive reports. So 80% of the, if I may just add, 80% of the reports that we generate are deep dive reports, not scoping reports. In my view, this has mainly been initial public offerings. This report is submitted to PMC1 to motivate for a broader due diligence to be done on the investment opportunity. In other words, in independent reports to be done by risk, legal, and ESG departments. Scoping reports are reviewed by the line manager for relevant content and logic and validity of investment case. The contents of these reports is debated extensively, and input is received from all eventual signatories to the document, being the compiler, the reviewer or reviewers, and approver. There is no single section that is the preserve of one person. The general manager is normally the reviewer and or recommender, and the executive head of listed investments is the final approver for submission to PMC1. Either of these parties could point out areas for improvement and redrafting by the compiler. This does not mean that an outcome is dictated. However, the weakness in these reports is that any dissenting view is not formally recorded. That is a major weakness. Appraisal reports for submission to PMC2. This is the third kind of report. In many instances, this report is almost identical to the scoping report. And this is quite a big difference to the unlisted scoping report versus scoping report. For us, these two reports are very, very similar because we do desktop analysis. That's what happens in the listed space. The purpose of these reports is to make investment recommendations to approving committees on transactions that are outside the normal rebalancing of the portfolio. In my experience, this has mainly been initial public offerings. The DOA, or Delegation of Authority, determines which committee is the ultimate approver of these investments. Appraisal reports are reviewed by the line manager for content, logic, and the strength of the investment case. The line managers are assistant portfolio managers, the general manager, the listed equities, and the executive head, listed investments. So the report on IO that you would have been submitted would have been a scoping report. It's not a deep dive report. I'm a strong believer in fundamental research as a basis for making investment decisions or making investments. This is the reason I introduced the 4-factor framework. I also hold the view that a culture of investment debate increases the likelihood of making great buy or sell calls. I would never ignore a view from an investment professional or investment professionals. The key weakness in this process, based on my experience at the PIC, is that investment professionals who manage the portfolio on a daily basis, in other words, analysts, portfolio managers, and the general managers, are not empowered with the final decision on whether to make investment opportunities to PMC, final decision on whether to make investment opportunities to PMC or not. In other words, executives have the final right to instruct that an investment opportunity must be presented to PMC.
Just on that question, if they have the final right to instruct that the investment opportunity be presented, in that presentation, does that include the differences of view? So that, if it comes in and you say they have the right to instruct that the investment opportunity is presented, but the report actually says it shouldn't go ahead, is it presented as the analysts have drawn it up, or does it have adjustments made to go, look, we want that to go through, and therefore the views are not necessarily presented in the same way? So really what I want to understand is the presentation as is made in the process that you've outlined?
The decision or the recommendation is not dictated by the executives. However, because they are the ones that would say this investment must go to PMC, whether the team likes it, in other words, whether the team finds it attractive or not, it obviously creates pressure to say this is something that the executives would like to see to go to PMC, and therefore it would create a pressure to say, if we don't like an investment, if it was up to us, we wouldn't even take it to PMC, because we would, obviously, because we're taking something to PMC, we're taking it there because we would want it to be approved, not necessarily to just be ventilated. However, the structure of it says, let it be ventilated at PMC, whether you would necessarily like it or not. So it's not an explicit, you don't like the company, you must, in other words, it is formally recorded in the document to say the team does not like it, however, the executives do like it, and therefore it's going to PMC. And I do think that is an area of improvement, is that we do need to, if the model still continues to say the executive would still have the right to take an opportunity to PMC, then the team should have the opportunity to have an area wherein not just highlight the risks, but also say this is the view of the team and this is the view of the executive.
So what you're saying, Mr. Mlibazi, seems consistent with what Mr. Siani was also saying, that investment professionals' inputs are disadvantaged in decision-making because that's done at the top, at the executive level, and that your inputs are not always taken into account. Would that be a fair way to see it?
Or they may be taken into account, but then pushed aside.
Yes,
Your
I would not say that investment professionals' views are not taken into account. However, I would say that in instances where executives do like an investment opportunity and the team doesn't, there would be, let's say, very strong debate. And that would create pressure on the investment team. However, in my view, it would be incorrect to say that the investment professionals are dictated to what to say or what to write. I do know that Mr. Siani did make a statement to say there was a conversation between him and Mr. Madavo wherein he was asked to write a positive report. Now, that is not a normal thing that I would have been part of. I was definitely not part of that meeting and that discussion. However, what I would say is that when a deal does come via this instrument, and I may say that it is in IPOs mainly, wherein if the executives would have wanted to participate in the IPO, there is pressure on the team. I also would like to put on record to say IPOs are 5% of what we do as a team. So Victor's views on the vast majorities of the companies that he covers, his views would be captured. And in fact, the portfolio would reflect his views. And the deep dive reports are captured on a system, and his views are what are reflected in that system, whether it may be the analyst or the PM or the APM.
But when a deal goes to the decision-making body, is the team represented there? If, for instance, the team didn't like the deal, but it does go up through the executive, is the team, your team, represented at the final decision-making body's meeting?
We would be in that meeting. The person who would go and present the opportunity would be the person who prepared the scoping report. I would be there as the general manager. The executive head of listed would be there. And obviously the CEO would also be there. However, the reality is that transactions, and IO is a good example, wherein the executives would have wanted to participate. There were debates wherein we were put under pressure. Now, that doesn't mean, so it's not a dictation, but it is significant pressure, which is very different to what we would normally experience when we're managing the portfolio on a daily basis, wherein we do a research report and we are left alone to make a decision on whether do we like this company, do we not. If we don't like the company, we go underweight it in the fund. If we like the company, we go overweight the fund. However, when it's the PMC process, then there is that additional layer of pressure wherein there's a level of our independence being removed because effectively we are being instructed to take this opportunity to PMC.
Well, what do you then do? What are you required to do? You are now under pressure, having said that we don't like this deal. You are now under pressure in the PMC meeting. What then happens? What do you do? Do you change your view as a result of pressure?
What we do, the way we manage, and we talk about it in paragraph 15, is we ensure that we highlight, one, our understanding of the investment case. Secondly, we highlight the risks that are associated with the firm. So in my view, it becomes absolutely critical that when we go to present in that meeting, that we articulate very clearly to the committee the risks that are inherent in this opportunity. To say, even though we may say participate in this opportunity, given that it may meet certain criteria, there are risks that we need to be clear, that we highlight to committee, so that when committee applies its mind, it effectively has a holistic view. I think the truth is that investment opportunities are multidimensional, and hence why I introduced 4 factors, is that we consider different things. you may have one opportunity that may be weak in this area, but it ticks the other 3 areas. You may have an opportunity that is weak in one area, but ticks the other 3 areas. However, on a balance of probability, that opportunity may still remain attractive. However, it doesn't mean that you shouldn't highlight the risks so that the committee is able to apply its mind.
If I understand you then correctly, you debate, put your viewpoint and why you got to the decision that you got to, and it's up to the PMC then to make a decision.
In a normal process, you will see when I talk to Ayo that obviously from a PMC point of view it was a ratification. However, in a normal process, that is correct.
Question? I wanted to check. So we heard that deals come from the top. You know, today we just said that. Is that true? Just as a question. The second question is that if deals come from the top, do you find that you are under pressure to sort of, in brackets, make this deal happen because it's from the top?
So if I may answer slightly long-winded, I think there's 2 major buckets. There's the bucket which is the normal portfolio management, and I think there are no, in my experience, there are very little deals that come from the top. And that's, remember, there's 160 stocks that sit in the portfolio. In those 160 companies, you know, there aren't pressures that come from the top. In initial public offerings, most of the deals that I've seen, if not all, came through the executive head either saying to us or me that the CEO has this opportunity and he would like us to look at it, or him himself saying, this is an opportunity, or there are people that want to list, and this is an opportunity that we need to look at. So in that sense, the initial public offerings, the vast majority of them would have come from us being instructed or told to go and meet certain management because that particular management would like to list their company.
Then do you feel, do you feel pressure then to say, wow, we need to make this deal happen?
I would say there are 80% of the time we did not feel pressure. Certainly I did not feel pressure. I certainly would say that I felt pressure on Ayo. I certainly would say I felt pressure on Sagamata. And remember at the time when Ayo happened, I had been at the PIC for a year and 7 months. So it was somewhere there. So it was the first time where really significant pressure was brought to bear. Outside of, these are people that I would like you to go and meet, and please can you come back with a PMC submission.
Let me check another issue. On the 4-factor model which you speak about, do you do scoring? Like, do you do a score and say this is out of 100 and all that, and this investment has gone at, say, 80% or 90%? Because that might solve a lot of problems in terms of scoring, just as it's done in procurement, scoring and all that.
That is a very, very good point. So the short answer is yes. There's a methodology in how we do it. When we assess the quality or the competitive advantage of a firm, we would have a subjective scoring approach. When we do an ESG assessment, it would largely rely on a scoring that we would receive from our internal ESG department. When we look at valuation, we would effectively score it, but it would be scored through the discount rate that we would want to apply for a firm. Similar to, and valuation and uncertainty are very linked together, because to the extent that we think the company has some level of uncertainty, we would incorporate that to some level in our valuation. Now, that's in a normal process. Obviously, if there are challenges in terms of lack of data or information, etc., we would then be forced to adjust how we would approach that investment opportunity.
But do you agree that scoring could solve a lot of problems in the sort of a non-enhanced index stuff, or different transactions?
I would agree with you. I think if you look at the outcome of our four-factor, we have a ranking table where we would rank a company, in other words, a list of companies that we would deem most attractive and those that we would deem least attractive. And that's a result of a combination of those four things that result in some kind of scoring. So my answer is yes, and I think what I'm saying is we already do that.
Yes, yes. So if IO was scored that way, could it have helped, to say no, maybe?
I think yes, and I think if you look at the structure of the report, we effectively touch on all those areas. We touch on all the key areas of the four-factor. The key weakness, and we'll get there when we talk about IO, is the lack of disclosure of the BT financials and the fact that the major asset within that group that would have generated value going forward, we had limited historic financials at the time. And so we had to find a way to value that firm with the limited information we had. And so what I'm trying to say to you is that if we had more time and more data, we would have been able to do, I think, a similar approach to IO as we would have used with other normal companies that have been listed for a long time.
So it sounds to me like on the AO transaction, the fourth factor, the valuations was out of kilter, or was somewhat not sufficient.
I'm not sure I would say it was insufficient. I would say it was not what we use as normal valuation. I think the truth of the matter is that when companies list, they are an IPO. And the reason why they're an IPO is because they haven't been listed for a long time. So a lot of times when you do an IPO, you're not going to use a standard normal way of valuing a company because it's an initial public offering. It hasn't been a public company. It's now becoming one. So that's why I'm saying that it's not an IO specific thing, it's an IPO specific thing, if I'm making sense.
But in respect of IO specifically, did you have the BT financials to make the valuation assessment?
So there we had to rely, and if you don't mind, I do go into how we valued IO. When I get there, I'm happy to address it and answer your question if that's okay.
That's fine.
So if I may just read paragraph 15, Commissioner, then move on. We manage this weakness that we talked about above by ensuring that we understand the investment case well, but highlight the risks that are inherent therein. Ultimately, instructions were issued by either the executive head listed or the CEO to submit investment proposals to PMC. IO Technology Solutions. As is the case in many instances, when members of my team were first approached by management of investee companies, I was not told about the meeting that Victor had with IO on the 16th of November 2017. Fidelis gave instruction to Victor to meet them without my knowledge. However, Victor did provide me with a verbal feedback that there is a transaction that we have been instructed to take to PMC. Post this discussion with Victor, my understanding was that we are preparing a scoping report to be submitted to PMC as per usual. I was not aware that during the 27th to the 30th of November 2017, Victor had asked that legal, risk, and ESG should start their due diligence documents. He did not discuss this with me. On the 5th of December 2017, Victor sent me a draft scoping report. I was in Cape Town at the time. I was unhappy with the fact that he sent me a document for review on the same day that it was to be submitted to PMC. I responded to him that I needed time to review the document. I believe my request to review is the reason that PMC1 was then postponed from the 6th December 2013 to the 13th December 2013. 13th December 2018, apologies. This is evidence that I was certainly not trying to rush through the fundamental research work. It is important to note that the final scoping report, which I approved by signing, for submission on the 13th of December 2017 is identical to the draft submitted to me for review by Mr. Victor Siani on the 5th of December 2017. This demonstrates and proves that I did not dictate valuation, conclusion, and recommendation sections to Victor. In fact, I relied heavily on his analysis to formulate my views on IO, given my trust in his abilities as an analyst.
So but you said that you weren't privy to discussions between him and Mr. Madavo.
No, what I was saying was that where he says the statement was made to him that he should write a favorable report, I was not in that meeting. However, there are many meetings, informal meetings, where Fidelis would either call me and him together or call him into his office, and we would have it, and there would be discussion about IO.
Question? Was Victor right to refer DD, to legal and risk and the other divisions before telling you, or was he right?
I understand why he did it. We were under extreme time pressure, and I understand why he did it. He was not correct in terms of the process, because you are supposed to request that those reports get done post the PMC1 approves the request for DD. I may also say, in my humble view, that Victor did not have the authority to force them to do those reports. In other words, they could have refused to say, please supply us with the PMC resolution that allows us to start with these reports. Paragraph 19. It is also important to know, oh sorry, I did read that already. Paragraph 20. The IO Technologies investment case. The investment case for IO Technologies relied heavily or relied on its strategic relationship with British Telecom Africa, or BT. The envisioned acquisition of BT by IO would position it as the most empowered amongst the large ICT groups in South Africa. Given the significant research and development spent by BT globally, we had the view that IO would have a significant competitive advantage in the South African ICT market. It is important to note that several of BT's large clients were required to improve their own BE ratings. This meant that these clients would likely require their service providers to have high BE ratings so as to improve their overall score. In my view, the combination of client requirements to have empowered service providers, together with the intellectual property that BT Africa had access to, created an attractive opportunity. In addition, convergence in ICT services was an important trend that I thought could be leveraged. BT would essentially form the backbone of an envisioned large ICT group offering one-stop to client. We used EOH as a case study, and it was our view that the group experienced success in their acquisition strategy over many years, even though we did note some weaknesses in that model. At the time, I viewed the risk of the transaction not happening, in other words, IO buying 30% of BT, as medium to low, due to the fact that the shares in BT was already held by a related party, being AEEI, and IO already had a relationship with BT. In addition, BT had already agreed for its CEO to move to IO. Approach to valuing or valuation of IO. The one major weakness and challenge was the fact that IO stated that BT would not allow them to provide their historical financial statements. In addition, the pipeline of the companies targeted were not disclosed. This challenge is similar to other holding companies, company cases that target unlisted companies such as special purpose acquisition companies. And if I may just add here that there are other holding companies that we as investors face similar challenges where you you want to value the company, the group. However, that group is holding shares in an unlisted company, and therefore you don't get full disclosure of the financials of that company. Simply put, a special purpose acquisition company is a public company, the shares of which are listed on the JSE. The purpose of a SPAC is to raise money which may be used for acquiring assets. Until such assets are acquired, the only asset of a SPAC is the cash which it holds pursuant to a capital raise through the issue of shares. Given the acquisitive nature of the IO strategy, we wanted to keep to a 3-year outlook. We therefore opted to use a normalized price to earnings valuation approach. I explained this in paragraph 27 and 28 below. With the use of a normalized PE, we could use peer analysis of key inputs such as median price to earnings and net margins as a guide to derive a value for IO. We could also use this valuation approach to assess the assumptions required to be made to get to the listing price of 43 Rand per share. The main source of our forecasts was the pre-listing statement. It provided key forecasts of the income statement, which in turn were used in our normalized price to earnings valuation for IO.
Just to interrupt you there, did you have the pre-listing statement in draft, or was it the final pre-listing statement at the time that you evaluated AO?
We had it in draft. And that, once again, was as a result of the time pressures that we were under, and we needed to have some source of information in order to do our work. So we used the draft with the understanding that once the final PLS had come out, obviously one would have compared the PLS, the final one, with the draft one and ensure that there are no changes. The main source of our forecasts was the pre-listing statement. Oh, I'm sorry, I read that already. So 28. These forecasts were independently reviewed and an opinion expressed thereon by a reputable audit and accounting firm. Their report formed part of the pre-listing statement used as our main data source.
Do you remember which firm that was?
That would have been Grant Thornton. A normalized price to earnings valuation is based on 2 components. Firstly, a normalized earnings number, and secondly, an average or median price multiple. Apologies, there's a typo there. In order to calculate a normalized earnings number, one would use an average or median profit margin of a company over a certain period of time as a guide. In other words, profit divided by revenue. One would also use a historic median price multiple as a guide as well. In other words, earnings divided by the price. We used EOH as a proxy because that company had, to the valuation date, been highly acquisitive. EOH's peak 10-year EBIT, that would be earnings before interest and tax, compounded growth rate was about 41% at the time of our analysis. And the stock traded at 22 times PE. That's its 5-year median as a result. Based on the analysis of peers, net margins in the software and services space ranged from 7% to 25%. We used a net margin of about 15.5% as a base case for IO, given its focus on higher margin services offerings. We applied a 20% discount to the EOH 5-year median PE. In other words, we used a 16 PE versus a 20 PE for EOH due to the fact that we were relying on forecasts from the draft or final. I'm sorry, I think that's also another typo with the question mark there. The pre-listing statement, the fact that I did not have a track record and a proven deal execution. So what we're trying to say there, with a little bit of typos, is we used EOH as a company which was already listed, and we could use as a reference point, and then say, using that as a starting point, what discounts would we apply, given the fact that IO was not listed before and it was just listing now, and didn't have the track record of acquisitions that EOH would have had. That's what I was trying to say there.
So given all of that, would it have been a cautious thing to do, as did Mr. Siani, to ask for DDs to have been done?
For DDs, you meaning?
Due diligence is to be done on AO. Was it a cautious thing or a prudent thing to do, even though it didn't comply with process?
I think the truth is we need to follow process that the PIC has provided. I, however, have to say that I understand the pressure he was under that would have resulted in him making that decision. It doesn't mean that I endorse him not having followed process of the PIC. (29) Using a discounted cash flow as a primary evaluation would have needed a long-term forecast of free cash flows. Although we did do a DCF as a valuation, as a backup valuation. However, given that the DCF was not annexed to the PMC submission on the 20th of December 2017, I think the DCF was done to give the team, in other words, Victor, Sunil, and myself, another angle of the valuation. It is possible that the DCF was done post the submission to the meeting on the 20th of December 2017. In other words, it was not used as a primary evaluation for IO. Tight timelines and the signing of the subscription form.
Just a question. If you don't have the BT financials, was it possible to do the long-term forecast and the DCF? Just if you could explain that to me.
Thank you, Commissioner. So the reason why we couldn't do a DCF is because we didn't have historicals, especially for historical financial statements, especially for British Telecoms, for BT. So we faced a situation where we were required to have a view of a valuation of a company, and yet we didn't have the data in order to do a normal discounted cash flow valuation, which is what we would do in a normal company. So we then had to, if I may say, improvise. We then had to, one, rely on the pre-listing statement. A pre-listing statement is an absolutely critical document in IPOs. It's not just in IO where a pre-listing statement is critical. Investors rely on pre-listing statements all the time in all kinds of IPOs. In this instance, however, we only had the PLS. We gained comfort from the fact that the forecasts were reviewed by an independent firm of auditors. However, we would have wanted more comfort by having the BT financials, would have been first prize.
Did the forecast include the BT stuff,
Correct.
The financials?
Correct. The forecast in the pre-listing statement included the forecast for British Telecoms.
Yeah, but you wanted your own calculations, basically.
We would have preferred to have audited historic financial statements so that we can do a more detailed analysis of the historics of British Telecoms.
Yeah, okay, all right. Thank you.
Am I paragraph? I think I'm in paragraph 30. Yes, paragraph 30. I was becoming concerned that we would not be able to meet the deadline of the 15th of December 2017. This is due to the fact that we had not gone to PMC 1 yet, and at this time, I believed that ESG risk and legal reports had still not been started. PMC 1 was scheduled for the 13th of December 2017. So on the 8th of December 2017, or sometime just before that day, I had a discussion with Victor about this. Victor then sent an email to Malik stating that the 15th December 2017 deadline was unrealistic and informed him that the end of January 2018 was a more realistic date. Victor asked that the IPO date be moved. On the 11th of December 2017, I was requested to act as executive head listed investments for Fidelis from the 11th to the 15th December 2017. On the same day that I began to act as executive head listed investments, I had a telephonic conversation with Fidelis who was in the USA at the time, about the pending IO transaction. The purpose of the call was to give an update of the issues and to get input from him on a way forward. I recall mentioning to Fidelis that we do not have historical financials for BT. This posed a challenge to us as we could not approach the valuation in the usual manner. In other words, the way we do companies that have been listed for a long time, which is a discounted cash flow approach. The private placement opened on the 13th December 2017, and we were preparing to take IO to PMC1 on that day. Per the records from Company Secretariat, the meeting was scheduled for 3 p.m. to 5 p.m. However, the PMC was cancelled as a result of a lack of quorum. Dr. Daniel Machila, Dr. Dan, had a discussion with me on the 13th of December 2017, wherein Dr. Dan stated that the IPO date cannot be moved. I cannot recall if at the time he provided the reason for this. However, at some point I became aware that it was due to the pending contract that BT had tendered, which required a certain BE status level. He instructed the team to keep to the original transaction timelines. Dr. Dan informed me that he had a discussion with the executive heads of legal, risk, and ESG team. He stated that none of the executive heads are expecting the due diligence reports from their departments to come with adverse recommendations given the work that was done up to that point. Therefore, I deduced that Dr. Dan's view was that PMC was highly likely to approve the transaction.
Question? If you managed to do the DD, would you have gone to visit BT, say, to ask, to check the operations and all that?
It's a good question, Commissioner. I think because it's an IT firm, in other words, we would not have done a site visit in the sense of wanting to go see an IT firm's location. That would not have been necessary, as it would have been for a mine or somewhere where there's a plant that we need to observe. However, it would have been good to discuss with BT management. That would have greatly assisted us. At the time, obviously, BT was not a listed company, and we would have wanted to do that. However, there are instances where a company is a target company of a listed company, and we don't necessarily meet the underlying managers. It's not untoward that we would not have necessarily met BT management. Would it have helped? Yes, it would have. $35.3. Dr. Dan informed me that due to the closing date of the private placement being on the 15th December 2017, he is instructing that the subscription form be signed. In other words, he asked me to sign as executive head listed, in other words, PP for Fidelis, and he will sign as the approver of the transaction. This would have been said to me sometime on the afternoon of the 13th December 2017. Dr. Dan stated that PMC will be asked to ratify the transaction at the next sitting of the committee. Dr. Dan explained that as the CEO and chairman of PMC, he confirms that ratification can be done, implying that it would not be a breach of PIC policy. The reasons IPP signed the IO irrevocable subscription form. The first reason, I had reviewed the reports prepared by Victor, sent to me on the 5th of December 2017 and the 13th December 2017, that covered all the key aspects that needed to be addressed. These would be the business model, the investment thesis, and the risks to the investment case. I became aware, that's the second reason, I became aware at this stage, in fact, that the due diligence reports from risk, legal, and ESG had already been initiated and were in fact close to completion as well. These due diligence reports were subsequently issued shortly thereafter, on the 14th and the 15th December, without recommendations that would have precluded the transaction from going ahead. However, these reports were submitted after the irrevocable form was signed. In other words, they were received after I had PP'd on behalf of Fidelis. The discussion with the CEO provided reassurance. This is the third reason. The discussion with the CEO provided reassurance, firstly, that as chairman of PMC and CEO of the firm, he can provide guidance on what needed to be done to meet the IPO deadline. He seemed very confident, and he seemed very confident that there is nothing untoward in the signing of the subscription form if we were to take it to PMC for ratification. I was clear in my mind that I could not sign the form in my capacity as the general manager, given the level of responsibility of that role. However, I was unsure whether the executive head could do so or not. Even though there was a DOA in place, I felt it important and a duty of care to get input from Fidelis on this matter, given his experience at the PIC. In that discussion, Fidelis explained that the CEO is, quote, a higher power than him, and that he would not go against what the CEO had instructed. I had no knowledge, this is the fifth reason, I had no knowledge then, nor do I have it now, of a policy that contradicted what the CEO said. In other words, that transactions cannot be entered into by the CEO and ratified by the PMC. Although I was aware that ratification was not the normal way that IPO transactions were done. I had only been at the PIC, this is the sixth reason, I had only been at the PIC for 1 year, 7 months at this point. And this was the first time that I was involved in a transaction where the deadline for an IPO had resulted in the CEO stating that there could be a ratification of a transaction. I had no reason to believe that what the CEO had told me was not true. The CEO had been at the PIC for many more years than me and had a successful track record, including being the CIO of the firm. I had no basis to doubt his integrity, and Fidelis had given advice to follow the instructions of the CEO. Seventh reason, I did not want to be accused of insubordination towards the CEO, given that I did not know of a policy that prohibited ratification and could not use that as an excuse not to do as the CEO of the organization instructed. The eighth reason, I believe I acted as a reasonable general manager, would have, after speaking to the CEO and chairman of PMC, Dr. Den, who assured me that ratification was a lawful alternative under these circumstances, as well as the input from the executive head that I reported to, who indicated that I should follow the CEO's instructions.
Sorry, can I just ask a question there? Given this, and you obviously indicate that you had some uncertainties about process, did you not think it appropriate to check with the PIC's legal counsel?
Commissioner, I didn't. I relied on the discussion I had with my direct line managers.
And are you aware of other people who were in acting capacities who were part of the AO deal approval?
I am aware of the meeting of the 20th of December 2017, which I was not a part of. I did not attend it as I was on leave. Most of the people in that meeting were in acting capacity.
Tell me, is that policy there now? I mean, do you know now if there is such a policy that ratification can be done afterwards?
Commissioner, I'm not aware of that policy. I'm aware of the comments that were made by senior management at PIC to say ratification is not part of process. However, I am not aware of a policy that says ratification of transactions is not allowed.
I'm just wondering which one should it be. Should one rely on the fact that there's nothing that says it's not allowed, or rely on the fact there's nothing that says it is allowed?
I think, Commissioner, that is the reason why I had to ensure that I discuss with the CIO, or CEO, apologies, to understand the reason why he's asking for ratification, as well as consult with my direct line manager, because I had only been at the PIC for 1 year, 7 months at that point, and I would not have claimed to be an expert on all the policies or all the experiences at the PIC.
And do you now know whether that has happened after the IO transaction?
I'm aware, given the comments from internal audit, that ratification is not allowed. I may add to say, Commissioner, that the internal audit report itself recommended ratification of this transaction. This is the report that was issued in May 2018. Itself referred to ratification of the transaction. And I speak to that when later on in my statement. The memo dated 15 December 2017 to PMC2, requesting that PMC1 not be held. In other words, the request for due diligence meeting, i.e. risk reports, legal and ESG, was completed because these reports had already been done prior to PMC1 approval. The purpose of the memo was not to ask that a due diligence should not be done, but rather that the meeting to request for them to be done be waived. This is important, if I may add here, Commissioner, because the internal auditor, in my recollection, seemed to want to say that we were asking that due diligence reports should be waived. That was not the purpose of that memo. The purpose of that memo was to say due diligences have already been done. And at that point, on the 15th of December, there was no indication to say those were not the final due diligence reports from those departments. And so we therefore put together a memo to say to ask for a PMC report, to ask for PMC1, which is a request to go to DD, is null and void given that the reports have already been performed. That was the purpose of that PMC memo, of that memo. This seemed logical to me as the due diligence reports were done when this memo was already submitted. I had a further telephonic discussion with Fidelis on the 15th of December 2017. The purpose of the call was to update him on the IO transaction before I went on leave. I then traveled to the USA on the 16th of December 2017. The payment memo, which was approved on the 19th of December 2017, stated that PMC will ratify the acquisition of shares in IO at the next sitting of the committee. As per discussion with Miss Khanewe Adams, who was acting general manager at the time, Dr. Dan had communicated the same instruction that he had given me to her. Post this discussion with Khanewe, she sent an email to Dr. Dan wherein she asked if the settlement can go ahead as, quote, the approval of the transaction has not yet been ratified by PMC listed, close quote. Dr. Dan responded, quote, please proceed with the settlement process. The PMC will be asked to ratify at the next meeting as most of the members are already on leave, close quote.
Just to place it on record, Mr. Commissioner, Ms. Adams will also be called to give evidence.
PMC2 was scheduled on the 20th of December 2017 to present IO. I was not at this meeting as I was on leave. The CEO, Dr. Dan, who was the approving signatory to both the IO subscription form signed on the 14th of December 2017, as well as the payment memo signed on the 19th of December 2017, attended this meeting. There were also 4 other signatories to the payment memo signed on the 19th of December 2017 who attended this PMC meeting. In addition, Dr. Dan had stated to me as well as to Khanewe Adams, that the transaction will be ratified at the next PMC sitting, which would have been on the 20th of December 2017. Therefore, it stands to reason that this meeting should have been a meeting to ratify the transaction. However, what actually happened was an approval and not a ratification. On the 4th or 5th May 2018, Internal Audit held a meeting with Fidelis and myself about the audit findings on the IO approval process. Internal Audit informed us that PMC that approved the transaction on the 20th of December 2017 should have instead ratified the transaction, as the irrevocable subscription form was signed on the 14th December 2017. There was no mention by Internal Audit at this stage that ratification was not in line with PIC policy or that it was not allowed. The finding was on the fact that PMC should have ratified the steps taken up to that meeting on the 20th of December 2017 and not approve the transaction. My interpretation of this finding is that ratification is possible given that it was suggested as a resolution by Internal Audit. The error that was made at the PMC meeting on the 20th December 2017 was that it did not ratify the transaction but approved it. As I was not in the meeting, I am unsure whether the actual discussions of the fact that the subscription form and the payment memo were already signed had been mentioned. The minutes of this meeting are silent in this regard.
Perhaps a slightly different question. Yes, the error, as you put here, is whether this was ratified or approved, and which it should have been. But if it was to be ratified, that would assume that the PMC actually had no ability to make any view or take any view on the deal. It was simply asked to rubber stamp the deal. And therefore the question becomes, what is the purpose of a PMC if you can take decisions that are simply there to be rubber stamped rather than considered? Is the error really not the question that the PMC role is undermined by the process?
Thank you, Commissioner. I think my understanding is that the people who sit on the PMC include people who are represented by ESG, legal, and risk. And what was very important to me when I sat with Dr. Dan to have a discussion was the fact that discussions, which, by the way, it happens in any investment firm, there are informal discussions that are happening at senior management levels all the time. Is this team picking up anything that's untoward? Are you worried about something? On the day that I PP'd for Fidelis and the discussion with Dr. Dan, it was clear in that discussion, based on what he said to me, that the people who sit on that PMC committee are comfortable in the sense that the reports that were going to come out would not have raised issues that would have resulted in PMC having material concerns that would have resulted in the decline of that transaction. So, in as much as I agree with you, Commissioner, through you, that PMC does have that role. However, the people, because of this time pressure that was there on this transaction, what Dr. Dan said to me was, yes, we do need to hold that formal meeting. However, I've had discussions with the people who are decision makers in that committee, and the reports that will be coming out will not result in them voting against it. That's sort of my first interpretation. The second one, in terms of the role of PMC, is it's not only its role to necessarily approve, but it is also to put in conditions that it deems necessary. And that is what PMC executed in this instance, as an example.
Well, yes and no, because the question for me would be, if the rules and procedures had been followed, they wouldn't have even had a due diligence at that point in time. It was the question of Victor Siane's decision to do a due diligence, even if it was desktop at that point in time, because of the time pressure. Is that correct?
I agree through you, Commissioner. I agree with you fully.
So therefore, the process of the PMC was undermined because there was a question of a due diligence due to time pressure, therefore accept everything going along, and the PMC did not do its job properly, because it shouldn't have had the due diligence in front of it, and if it was doing its job, it should have said, no, we start at the beginning again because this is wrong in terms of process.
Commissioner, I accept that normal process was not followed. I accept that. What I'm trying to say is what was in people's minds when they were applying, what was in my mind when I decided to PP on behalf of Fidelis. What was in my mind was to say, process is not being followed. This discussion with Dr. Dan is a management override, if I can put it, of normal process. And so I had to sit down and say to myself, because PMC is not being had, we are signing I'm PPing on a form that is irrevocable, and Dr. Dan is approving a form that will legally bind the PIC.
And in that process, condoning the lack of due process from Victor. You have to condone it if you've accepted that you have a due diligence in front of you, and you're
Correct.
saying we are doing this. And therefore, how would it be that a person who has done the wrong thing for the right reasons because of pressure put on him is the person who's fired, is the question I'm asking. If you relied on the due diligence that he did, you had to condone the process that he followed and not victimize him in that context, in my view. So once all of these things were condoned, then how do you say, well, we've condoned it and used it and done the deal, but you actually didn't follow process? Because then process should have been the stopping point of that process that was wrong, should have been the PMC.
Commissioner, through you, I fully agree with you, ma'am. Fully agree with you. I think it is, in my humble opinion, incorrect that Victor should have been one. As investment professionals, all we have is our name and our reputation. And I think the way that his name was put out there was almost implying that there was an ulterior motive to what he did. And I do not believe that Victor did what he did out of an ulterior motive. I believe he did it because we were under time pressure. And so I agree with you that in as much as I cannot sit here and say I condone breach of process, I fully understand why he did it. And it actually, you are right, through you, Commissioner, that if he had not done that, it would have put me at even worse position, because my discussion with Dr. Dan, I would have said, Dr. Dan, we don't even have due diligence reports from ESG, risk and legal. So you are right. So his response to me was very much to say, no, the work has already been done. Now that was a surprise, right? Because in my understanding was that we needed to go to PMC 1. So I fully agree with you to then turn around and I do agree that Victor, even though I don't agree that he's junior in the sense that he's a very senior analyst, and I rely on his view, not just on IO, on other transactions very heavily, to victimize him and to put the blame on him, I agree with that sentiment. But so what I'm saying is I accept that there was a breach of process. This was not a normal process. But I think what I am saying is that despite that breach of process, there was work that was done. There was work that was done. Even though it didn't follow the normal, there was no formal PMC 1 that approved it. But fortuitously, for me at least, that work was done.
But not fortuitously for Victor.
That is, and I think I need to put on record that management, in my understanding, that was a board decision to take that step. I was as shocked as Victor was that he was suspended.
Am I correct to say that there were actually two breaches at least? The first one was to go ahead with due diligence without the transaction having or request having been sent to the PMC to give its consent to due diligence. Am I correct? That's one. And the other one is the signing of the subscription certificate before the PMC had approved the
Yeah.
deal.
That was a breach of process. It was, and there were two breaches, and in my view, my discussion with the CEO was to say, I am giving instruction to say, let's breach the process because we will get it ratified. So the question I have in my mind was, when I relied on the fact that ratification in a situation where the deadline for IPO, this IPO is the 15th, we are now finding ourselves it was signed on the 14th, there's this pressure. The CEO wants to do the transaction, and he's saying the PMC will be ratified, and he had discussion with the people who do sit on that PMC. Was it a breach? It was. Was there a workaround in terms of the applying to say what, was the work applied? Did people apply their minds on the risk side, on the ESG side, on the legal side? Did we apply our mind on the scoping report? What I'm trying to say is that there was a process of people applying their mind. Was there a breach of meetings not being had, and that was a breach? But I'm saying it's important to also say that there was an application of one's mind. And the issue of ratification was not something that was seen as something that cannot be a replacement of the lack of having PMC.
It was going to be ratified. I've told you that there were two breaches. What was going to be ratified by the PMC?
So what internal audit said in its report was the actions that were taken up to PMC meeting, meaning the signing of the subscription form and the due diligence report being done prior to PMC 1, that needed to be ratified. And I'm assuming, obviously, the approval of the actual transaction with the conditions. In other words, PMC then applying its mind as to the conditions that they would want to apply on this transaction.
And that would have included sanction in the due diligences. That would have been done normally by PMC 1. Is that not correct? The ratification.
Correct. It would have been so the PMC 2 would have been asked to remember there were two things that were taken to PMC. One was the waiver of PMC 1, which is to say the reports are already done, so please give approval to the waiver of PMC 1. So that was supposed to be done on the 20th. Then secondly, to ratify the fact that an irrevocable subscription form was signed on the 14th. And then thirdly, to effectively raise whatever condition which PMC normally does. No, it's not normal. There are instances where it does, there are instances where it doesn't.
Yeah.
Sorry.
Question?
Go on.
Okay. Just to ask a very difficult question, to you, if you can venture some answer there. Do you think someone must carry the can on these things, carry the can? And if so, who should carry that can?
Commissioner, in terms of the signing of the subscription form, it is my view that the CEO should take accountability for that because he issued that instruction with an explanation to me that ratification is not something that is breach of PIC policy.
Mr. Commissioner, I've noted we've gone past 4 o'clock, and Mr. Malibazi has 2 more topics to cover. Can we proceed, or should we adjourn for tomorrow morning?
I thought we would go at least to 4:30.
Just had one more question in relation to this, because just to get this whole question of what was eventually ratified. On the 20th of December meeting, what exactly was ratified? Was it ratified, approved, and then subsequently called ratification? So we know that the ratification didn't take place, approval took place.
Approval took place.
Right? But then what was approved? The original decision about doing a due diligence. The question was, it also approved that the subscription was okay in retrospect, that it was prior to the sign-off and approvals, and it was done. Was the entire process for the IO transaction approved and ratified, both approved and then ratified in its totality, or were only elements of that? Because I'm not clear from what has been said what actually in the end was approved and then changed to ratification. Was it all elements of the deal?
Okay, let me try to explain it, Commissioner. On the 20th of December 2017, what should have happened did not happen. PMC effectively approved that transaction as if there was no irrevocable signed on the 14th of December. That was an incorrect thing to have happened then. And that is not what I would have understood that should have happened in that meeting. What that meeting approved is it resolved to approve the transaction, to say, as if there's no irrevocable transaction. In my humble view, that was not correct. And what should have happened, in my view, would have been the person who was the approver of the irrevocable form, who would have been in the meeting, would have explained to say, this transaction has been entered into. I have explained to the acting executive head of listed, Lebogang Molebatsi, on the 14th, and go through the reasoning as to why he requested me to PP sign on behalf of Fidelis and to effectively also sign as approver of the transaction, and then explain to PMC listed what needed to then happen, which would be to ratify that activity. So that did not happen. So that's one. Then, post the audit finding by internal audit in May, they were requested us to say, we need to correct the error of that meeting on the 20th of May 2017. I'm sorry, 20th December 2017, apologies. And so what then happened, there was a very critical thing that happened, is PMC was then approached post the audit finding to say, we made a mistake, or in other words, PMC did not do what it should have done. We are coming now to PMC again to ask that that error of approving and not ratifying be corrected. And that resolution was taken by PMC to say, and I just wanted to find the actual wording, if I may, Commissioner, if you may bear with me, so that I just want to give you the exact wording of what was said in that PMC resolution. If I may I read the whole thing? So it's a round-robin resolution of the Portfolio Management Committee listed investments. Ratification of the PIC's participation in IO Technology Solutions listed IO private placement. It is recorded that the PIC's internal audit highlighted that the listed equities team made a mistake in requesting approval from the Portfolio Management Committee listed investments in participation in the private share placement. The next sentence is deleted. I think it was deleted by the final signatory, who was the acting CEO at the time. So I won't read that sentence.
I think you should read it.
Okay, let me read it. Okay. The intention was in fact to request ratification of the transaction from PMC listed. Okay. The purpose of this submission is to request ratification from PMC listed for participating in IO's private share placement ahead of its listing on the Johannesburg Stock Exchange in order to regularize the approval request submitted to PMC listed on the 20th of December 2017. The listed equities transaction team, environmental, social and governance, legal and risk teams completed their due diligences into IO between the 5th and the 15th of December 2017. On the 14th of December 2017, following discussions with executive heads of listed investments, investment management, legal and risk, the PIC CEO signed an irrevocable undertaking to purchase 99,782,655 shares in IO for 43 rand per share for a total consideration of 4.3 billion rand, acquiring 29% of IO. On the 20th of May 2017, the transaction team submitted a request for approval of the said investment in IO from the PMC listed. The request was approved. Okay. On the 21st of December 2017, IO listed on the JSE. It is hereby resolved that the committee notes the mistake and agrees to regularize the approval request submitted to the PMC's listed on the 20th of December 2017. That the committee ratifies the PIC's participation in IO's private share placement for 4.3 billion to acquire 29% of IO at 43 rand per share ahead of its listing on the JSE. So what I'm trying to say is, one accepts that the 20th of December, it was clearly, or I would assume, I wasn't there, that the fact that the irrevocable form was not raised by the person who signed it. It would appear to me, I don't know, I haven't listened to the recording. And therefore PMC then approved the transaction as opposed to ratifying it. When internal audit picked that up, they then gave a recommendation as to what is to be done. And that recommendation was to say, there was simply a mistake there, obviously because I guess in hindsight, that was not disclosed to that PMC. Therefore, PMC should be asked to ratify that transaction.
Thanks. I think that certainly helps clarify the process. It doesn't help clarify the approach of what was followed, but it helps clarify exactly what was done. But just one point, if I could. You said there that the due diligence was completed between the 5th and the 15th of December.
Correct.
So how would they have been able to sign an irrevocable on the 14th of December before they've got the due diligence completed? Excluding the fact that they shouldn't have done it in the first place, but because it had not been approved, but they did it before the due diligence. So the question it's compounding the problem of signing ahead of approvals, that you didn't have a completed due diligence if your dates are correct.
That is through you, Commissioner. That is correct in the sense that the actual reports, I think the risk reports, the ESG report, there was one report that came late on the 14th, but the other reports came on the 15th. So I think one needs to maybe just to give some light as to how discussions happen within the PIC, is that discussions with...
So you can, I'm sorry, I don't want to interrupt you, but it's not about the discussions that take place. It's the question that you're taking a decision of that magnitude before you've got the completed paperwork.
That is true.
Yeah?
That
really the
happened.
line.
So so let's be clear without trying to...
Yeah.
The irrevocable form that was signed on the morning of the 14th was signed. The only report that was completed at that time was the scoping report. That is what was the scoping report, which is what I reviewed and signed. The other reports, as of the moment when that irrevocable was signed, those reports were still, my understanding, almost complete. Obviously, I don't know. My understanding is that they were almost, and once again, when I say almost complete, it's based on the discussions I would have had with Dr. Dan and what I was told. But you are correct, is that, and that's why, to be very honest, it did create discomfort in me. And that's why I needed to get guidance, not only from my, because remember, as the GM, I knew what I needed to do. As executive head, and as, it was gray to, when I say gray, I didn't know what can management override with the intention of ratification later. So I'm not here to try and sugarcoat it to say, the form that I PP'd on behalf of Fidelis on the 14th was signed before the actual reports were issued.
And perhaps just one other question, which is probably not your issue, but perhaps you have a view on it, is that given that this came out of an internal audit report that pointed to quite a serious breach of process, I would have thought that it would have required a meeting to exchange views, not a round robin, which we just sign off yes or no. Why would something of that magnitude be accepted to be signed off by a round robin?
I think, in my view, a round robin is not necessarily illegitimate way of doing it. I fully accept.
No, it's not illegitimate. It's just what is good practice.
Correct.
It depends
correct.
on the issue at hand
Correct,
whether a
correct.
round robin is appropriate or not appropriate.
Correct. So I guess what I'm trying to say is, sitting here, do I recall why we chose to go to round robin as opposed to having a formal meeting? I don't recall that why that decision was made. I would deduce that there was urgency post my meeting with Fidelis and the internal audit to say, wow, this is a problem. We need to get this done yesterday because, as you say, this is a big problem. And so there would have been, just thinking logically, there would have been a desire to get this PMC done yesterday. And whether maybe diaries didn't work and therefore a decision was to say, it doesn't seem like diaries are working, let's go for a round robin. I can't remember. I can't remember the decision that was taken.
Just before we move on, Mr. Mlebadzi, have there been other transactions that were approved in a similar way as AO was?
In my knowledge, this was the first one. This was the first one, and I think that's probably why, this was my first one. This was the first one.
Middle of paragraph 42.
Yes, my interpretation of this finding is that ratification is possible given that it was suggested as a resolution by internal audit. The error that was made at the PMC meeting on the 20th of December 2017 was that it did not ratify the transaction but approved it. As I was not in the meeting, I'm unsure whether in the actual discussion the fact that the subscription form and payment memo were already signed had been mentioned. The minutes of this meeting are silent in this regard. In order to comply with the recommendation of internal audit, we prepared a submission to PMC signed by Victor, myself, and Fidelis, explaining the error made at the PMC of the 20th of December 2017. The error being that the resolution should have been a ratification of actions done before that meeting and approval of the conditions PMC 2 required to be fulfilled. On the 11th of May 2018, PMC noted the error and changed its approval to ratification of the IO transaction via round robin. The put agreement. On my return from leave on the 9th of January 2018, I had a discussion with Victor about the conditions that PMC had resolved to put on the transaction and requested that we meet IO management urgently to inform them of these. Victor replied that he has struggled to get any kind of response from his contact at IO, that being Malik Salih. IO management continued to be unresponsive to our requests, sent on the 20th of December 2017 and the 9th of January 2018. As at the 14th March 2018, it was clear that this was now a crisis. At this stage, I requested Dr. Dan to contact the chairman of the IO board in order to try and get some response from IO. On the 23rd of March 2018, Dr. Dan's office sent a mail to the chairman outlining the PMC resolutions. As a result of this, we, Fidelis, Victor, and myself, met IO management on the 29th March 2018. That meeting, however, was adjourned without discussion of the put. One of the concerns was that IO was in a closed period and therefore could not disclose price-sensitive information. We agreed that we would continue to work with IO to conclude the put agreement with some urgency. The meeting with the chairman was then deferred to post results in May 2018. The first draft of the put agreement was received from IO, that we received from IO was completely inadequate. Victor and I responded to IO in this regard with our objections. This began a long process of drafts from them and counter drafts from us. It became clear that IO was unwilling to provide the put as envisioned by PMC. As such, on the 8th of October 2018, we submitted a memo advising against the signing the IO put as the terms remained unfavorable to the PIC. This memo was signed by myself, Victor, Sunil, and Fidelis.
Sorry, just again on a point just of process and clarification, that if the proper process had been followed, those conditions would have been presented and done before signing or transfer of the money. If it had been proper process right in the beginning in December, before the listing, you'd have had PMC put its preconditions.
Correct.
And therefore, because that was not done, you're battling a year and a bit later to still get a response that protects the PIC. That would have been in place as part of the signing off if the proper process had been followed. Is that correct?
I think, Commissioner, I would accept that we did not have leverage anymore. What I would say...
No, but before, I'm not talking about the leverage afterwards. I'm saying that if it had been a normal process where the due diligence was done, the different committees met, they looked at it, and you felt that there was a need for a put, that would have been part of the agreement before you signed off. Would that be correct?
It would, yeah, as a normal
process.
As a normal process. I just need to clarify a few things. One, there are conditions that are not, in other words, PMC does regularly give conditions that are saying, you've got approval, go and do the deal, please go and work on 1, 2, 3, 4, 5 and make sure that they're in place. So that happens often. And it doesn't mean that when PMC then sets that condition that the transaction dies or that you would need to do those things before the transaction happens. Okay, so for example, and I think the put example is a very good example. If you look at how puts are put together, puts would not be put together in a space of a short duration of time. And so it is feasible that the put is put in place with the understanding to say, do the transaction, but these are the things that we want you to go and make sure that you get on behalf of our clients, on behalf of PIC. Now, whether that was what PMC had intended, I cannot confirm. It's obvious to me, looking back, that that's maybe not what was intended. In other words, maybe that they wanted the put to be done before the funds flowed. That was obvious. That's just my interpretation, given the feedback that I've been getting.
Just to take a step back, Mr. Mlebadzi, what is the purpose of having a put agreement?
It's a very good question. I think, first of all, when we do a listed equities investment, most of the time we take equity risk. And so we don't generally take out a put agreement when you are investing in shares. There are very few instances wherein you would want to create protection on the downside. In other words, to say, for example, in this instance where PMC, I think, raised the issue to say they believe that the valuation for IO is too high, and therefore the risk that the share will fall is there, and therefore they believe that a put is required in this instance. Okay? The only other instance that I can recall is when we did Vodacom Tanzania, wherein we actually, in that transaction, we actually walked away from the transaction. And Vodacom Tanzania approached us, or Vodacom approached us with sort of a sweetener wherein they offered us a put. So if you look at all the other IPOs that we've done, we didn't have put agreements put in place. So IO was the first one that at that point we did. I'm sorry, when obviously we did Vodacom Tanzania, but that was, we had declined the transaction and the company came back. This was the first one that PMC put as a condition in the resolution. I don't know if I'm answering the question.
Yeah, you are, and very helpfully, thank you. But it also then implies that the PMC understood that the share price was overvalued and that should not have been done at that price, because you wouldn't have wanted or had this in place if you had more confidence about the share price.
That is true. So PMC expressed that view, that they expressed that view to say there is a concern that the valuation is too high. That is correct. And that is why they requested the put.
Question on the put and the timing. You know, timing is quite critical, it looks like. So if you are going to give a company money and the put takes months and months, I mean, surely that can't be right, because you lose the leverage. Once you give money out, I mean, really, what do they have to, you know, what forces them to do the put?
Through you, Commissioner, I think it's a good question. I think in this instance, and it happens in other instances where PIC is a strategic partner. So when we enter into a transaction and you own 29% of a company, you effectively become a strategic partner to that company. And one would have expected a few things. One, in my professional judgment, management at IO completely ignored us at our level, and they chose to engage above our pay grade. And that for me was not professional in my view, in the sense that it was clear that even though we had become a strategic partner, we were not being treated as such by the IO management. So in other words, negotiations with IO was not purely based on whether we had deployed the cash or not. It should have been based on we've now become a strategic partner in their business. And therefore, there's a level of engagement, which we do when we engage with numerous other listed companies, wherein when we take a material part of the company, such as 29% or anything above, 29% is a big stake of a company, the level of engagement that management affords you, it's much higher than if you owned 1% of the company. And so the level of engagement that they were willing to give, at least at my level and at Victor level, at Sunil level, was completely strange. However, my understanding, and I don't know this for a fact, was that that engagement continued above me and Victor and Sunil. So it was anomalous that they were not willing to discuss with us, and their attitude, their posture towards the put agreement was very dismissive, which is not something that a bona fides business partner whom you own 29% in their company would be engaging you as.
Yes, it's quite strange because Victor actually referred to this treatment, that you guys got from IO. And I mean, as we know, the PIC is a powerful organization, and one wonders why were you treated this way? I mean, can you venture something there? Why was this alleged disdain, and treatment against the PIC?
And perhaps in responding to that, could you just look at paragraph 49 and what were the differences in the sign-off and the recommendation?
Okay, so one, it was in my comments, and Malik Sali sort of sent one email to Victor, which for me was very revealing, where he said that they had engaged with senior executives at the PIC, which obviously I was not in that meeting, or Victor would not have been in that meeting. So I'm deducing from that there were discussions that were being had with people who are more senior than myself. I don't know who, I don't know if it was Fidelis or if it was Dr. Den, that was, those discussions made Malik in particular feel that he doesn't need to respond to us, or he doesn't need to supply us with answers, or even to say, even when we're negotiating the put, that our inputs into the put are not as, or they can be overridden, let me put it that way. So if I just go to paragraph 49, where we say, on the 16th a version of the put agreement was different to the one recommended and signed. One of the critical things that, that big differences between, if you may just give me a moment, Commissioner, I'll try and find, the actual memo that we submitted. So the critical differences, and if I may, I'll just read some of the differences, and I can submit this as well.
Is that part of the annexures?
No annexures have been made to this particular statement, but we can gather all of the documents which Mr. Malabadzi's referred to.
Yes. So in this particular memo that we wrote to the CEO, I'll just highlight the big differences. So for example, one is the IO-AEI proposed clause would say to provide PIC downside protection from an IO share price from 22 Rand. Okay. In the clause that we had, supported the CEO signing, as an example, provides the downside protection would have been from the share price of 28 Rand. Now, that was already a compromise from our side, because initially we would have obviously wanted as much protection as possible. But 28 Rand was really the absolute minimum, because, remember the gap between 43 Rand and 28 Rand is already assuming a certain level of fall in the share price. Now, one would have been able to say, okay, because it's an equity investment, one is able to accept some level of short-term volatility because we buy into the long-term prospects of the company. But 22 Rand was something that we felt was, it rendered the protection irrelevant. So the other one where it says that AEI should settle its obligations to PIC in IO shares, such shares shall be valued at 35 Rand each, okay? And what we had recommended was that, or the draft that we had signed was that AEI should settle its obligation to PIC in IO shares, such shares shall be valued at the VWAP. So now we didn't want to peg it at a specific number. We needed to have a market contingency, because if you peg a number that is not market related, you effectively removing the listed nature of that share. So the idea of a VWAP was absolutely critical. The other one, and I'll just give this last one, is to provide protection for 90 days after signature date. All right? And we had, the previous one that was signed was we will provide protection for 12 months after signature date. So, and once again, 12 months was a compromise from our side. I mean, to have a put agreement that is only effective for 90 days, in our humble view, it didn't provide protection.
Just for record purposes, Mr. Mlebats, the document you've just read, what is it dated and where was it presented?
Okay, so this is on the 8th of October 2018, a memo addressed to Dr. Daniel Machila, Chief Executive Officer, IO Technology Solutions Downside Protection Agreement. And it's signed on the 8th of October 2018.
And signed by Dr. Machila, notwithstanding the team's recommendations.
So the memo that we submitted to the CEO was compiled by Victor, was reviewed by Sunil, was reviewed by myself, and recommended by Fidelis. So this was obviously addressed to him. However, the CEO then proceeded to sign the put agreement.
Just while we're at signing of documents, to take you back to the ratification. On the 11th of May 2018, PMC, were those the same people that were at the 20th meeting, 20th December 2017?
Through you, Commissioner, no, it was not. The meeting on the 20th of December 2017 had majority acting members. The people who were permanent members were the CFO and the CEO who had attended. If I recollect well, the other members on that committee were acting. The memo round robin, or the resolution, the round robin resolution that was later, was signed majority by people who are actual members.
We can move on to Sagamatha, the next heading, paragraph 50 in your statement.
Sagamatha Technologies.
I just mentioned that it's past 4:30, but I think shall we finish off? But we should finish. But the majority decision is that we finish. No. We don't end here, but finish the statement, finish the evidence of this witness.
Yeah. Thank you, Mr. Commissioner.
Don't get paid overtime, but it's okay.
My learned chief evidence leader also says to say that Mr. Mlebats will also be available tomorrow morning.
Okay. Maybe we should leave it to tomorrow. It's a new transaction. We should leave it to tomorrow. It's a new transaction. Let's leave it tomorrow.
If he's available, I think let's adjourn at this stage and reconvene tomorrow morning at 10. Okay?
Thank you.
Is that okay with you, Mr. Mulibat?
That is okay, Commissioner.
Yes, thank you very much. We shall then adjourn until tomorrow at 10.
Okay. Sure.
Is it okay with you tomorrow?
No problem.
You've done excellently.
Thank you.
Excellent. Well done.
Thank you.
You're very objective, honest, and I think they will appreciate that.
But you're good. No nerves.
Just adrenaline kicks in.
I made an example of how this from the DA. If I go to a bank and I apply for a personal loan, but this I go to African bank and I apply. And then the African bank is context. I apply for 40,000 rand, they only give me 200,000. Your credit history, whether you offer liquidity, you know. So what does that now have to do with you? Because the effort is I've got cash. That's fine.
Okay, we can remember one text or something. Because we can find that for people who yeah. Okay, shut. Yeah. Yeah, the code.